Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to go over Xpeng. They reported their May deliveries, so I wanted to give you my thoughts, as well as some of the competitive advantages that I see and why I like the stock so much. So let's jump right in. All right, guys, before we get started today, subscribe to the channel for me. Hit that little bell so you get notified every time I post. There's also a link down in the description to my Patreon account. Come over and join the family. You know, we're building an awesome community of like-minded individuals that are constantly trying to help each other. You'll get access to the private Discord where we talk stocks. You'll get links to 5 portfolios to check out. And then anytime I buy or sell a stock up to the second I do it, I send out a notification so you can follow along. I also send out a lot of like long-term swing trade setups or anytime I map a chart or I've got a watch list. Really anything I think can help us grow our portfolios. So if that's something you're interested in, if you want to be a part of the squad, come check it out. I think you'll get a lot of value out of it. Day one squad, you guys know that I love you. Thank you so much for your support. It means the world to me. So, but let's get started. For those of you guys that are new around here, Xpeng is one of my favorite stocks. I think they are going to do very well. I actually think they're going to be one of the best China EV stocks, out there. I actually think that, within the next 10 years, we could even see them expand into the United States. I mean, that's a massive claim, but they have already expanded out into Norway, so we'll just have to wait and see. In this video, I really just wanted to go over the deliveries, kind of give you my thoughts, but also kind of go over some of the competitive advantages that I see, why I like the stock so much, and kind of what my plan is moving forward. Then we'll take a look at the chart. I'll give you my price prediction, and then we'll wrap it up. So let's get started. First thing we're going to look at, guys, is the May deliveries. So as you guys can see here, in May, they delivered a total of 5,686 smart EVs, representing a 483% increase year over year and a 10% increase month over month. Now, that 483% obviously looks amazing, but when you're coming off a low baseline from 2020, it's not that, impressive. I am more interested in the 10% month over month. If they can continuously grow their deliveries month over month over month at 10%, that will be huge for the company and they'll do very well. Now, out of those deliveries, they consisted of 3,797 of the P7s. That is their four-door sedan, the car. They also had 1,889 of the G3s, which is the compact SUV. Like we've said in previous videos, I really like the SUV body style because that body style in particular, the SUV, is getting more and more popular worldwide. More and more people are wanting bigger cars, more space, higher up off the ground, safer, all of those things that come with having a bigger car. So if they can continuously ramp up the G3 sales and even it out to where they're selling about the same amount of each vehicle, I think that will be huge for them. Now, as you can see here, the year-to-date total deliveries have reached 24,173 units, representing a 427% increase year over year. So they're doing fantastic there. Now, the number of P7s delivered in May reached a record high of the 3,700, demonstrating the strong customer appeal of market-leading smart features. Guys, when they call it a smart EV, like I've said in previous videos, they're just really trying to target like the younger demographic. They put a lot of emphasis, a lot of focus on technology, autonomous driving, the internal, the infotainment, because they're trying to go after a younger demographic, that is more keen to want to buy something that's more technologically advanced, which is fantastic. I think that is going to be a huge advantage for these guys because everybody wants the smartest, the latest, the greatest. It's just like when you buy a phone, you always want the best, software. They actually set that record back towards the beginning of the year for the longest autonomous drive without human intervention. It was actually longer than the Tesla Model 3. So big advantage there, guys. Like I've said, the 40% of their workforce is in their R&D department, so they are very serious about constantly growing the technology and the autonomous driving, which again is huge. Now, in January this year, they launched their XPilot 3.0, which is the navigation guided pilot highway solution system. It's just a long word for saying autonomous driving. What Xpeng actually does, and this is something that I am very, very bullish on, is they send out over-the-air updates. I believe Tesla does that as well. But since January 2019 till May, they have released 23 over-the-air updates. Now, in those updates, they can upgrade or update a ton of different features. They can update autonomous driving. They can upgrade navigation, electronics, infotainment. They can even upgrade the chassis, the powertrain, and the battery management system. So within that time, they've sent out 134 new functions, features that were not there before, that were brand new functions. They've also optimized 2,326 of those features or, upgrades. They just improved them and made them better. Cumulatively, over every vehicle of every update that they've sent out, they have upgraded 380,000 items. So 380,000 upgrades that have been sent out to all their cars, all their customers. The more data that they send out, the more upgrades, the more people using the upgrades, the more data they get, the more they can focus on it and find ways to improve it. Now, the reason why I like this so much, the reason why I'm so bullish on the over-the-air updates and the XPilot was because when they sent out that XPilot in January, they have had their customers drive an average of over 1 million kilometers a month using that 3.0 XPilot. Now, with that many people driving, again, that gets them more data. But that when they sent that out in January, it was the first time in history of their company that they were able to generate revenue from one of their over-the-air updates. Okay, they are the only Chinese automaker right now that has been able to charge for the autonomous driving, the software, separately from just the vehicle. Most of those automakers, when they sell the vehicle, if you buy the vehicle that has the technology package or the autonomous driving, you pay for it all at once. With Xpeng, they have had, out of the eligible P7s that were released since they started, delivering them, they've had a 25% attach rate. That's reoccurring revenue right there that they are going to continuously build and build and build and make better. Okay, the reason why that's so intriguing is because in reality, they can create a very high margin software part of their business. It's reoccurring revenue, it's consistent, it's low cost, high margin, and as they sell more cars, there's more and more people that are going to want their software and need their software. As of right now, on average, they are sending out one over-the-air update per month, okay? Customers are willing to pay to constantly have the best, software, the most up-to-date and advanced technology. With 40% of their R&D department, all they're doing is focusing on upgrades and updates, and they're getting more and more data as they sell more and more cars and the attach rate goes up and more people use it. That is something that can truly free them from the massive competition in the EV industry. Because it's just setting themselves apart. It's creating a whole new stream of revenue that is very high margin and easy to achieve. Guys, that is huge. I'm very bullish on that. I wanted to bring that to your attention because that was the first time they've been able to charge for that in history. So now the other thing with Xpeng, and I wanted to kind of mention the last thing, was that China, they are growing their middle class at a historic rate. In the last few years, they have had more people move up into the middle class and expanded the middle class than ever in history. So as time goes on, there's going to be more and more people in China that are moving up into the middle class and can afford a $31,000 vehicle. That price point of the $31,000 is another reason why I really like Xpeng, because if you take a look at like NIO, their average price for a vehicle is around $60,000, so double what Xpeng charges, which obviously opens them up to a much bigger audience. Now, as you guys can see here, they also launched the P7 Wing Edition and the lithium iron phosphate battery powered G3 and P7 that also contributed to strong delivery results to date. Guys, their deliveries are looking phenomenal. If they can continuously grow that, they will do very well. I did want to show you guys something. Guys, take a look at this. Back in 2018, they did $1.4 million in revenue, and in 2017, they pretty much didn't do anything. Now, look at what they did in 2018. They almost did $1 billion in revenue in 2020, just about $100 million under that. And in their trailing 12 months, they've already done 1.279 billion, and they're projected to end 2021 at 2.3 billion for the entire year, which will be a 155% increase year over year. And then they're going to grow revenue by 90% in 2022 to 4.3 billion in total revenue for the year. That is fantastic. I mean, guys, look at the numbers. I mean, obviously they're still negative, right? They're still negative on net income, EPS, free cash flow. Their bottom line still negative, but their gross margin was 4.6% in 2020. They're expected to double that in 2021 to 12.2% or 12.8% or one of those numbers. It's in the 12% range. So they're literally on pace to more than double their gross margin in 2021 and then grow it again to 15% in 2022. Now, if they can, really execute on this software part of the business with charging a reoccurring revenue for that XPilot and updates, because they've got XPilot 3.5 and XPilot 4.0 set to release in the coming years. So if they can continuously do that, that's high margin. That will expand their gross margin and hopefully get them to profitability sooner than expected. Now, they will remain negative on EPS and free cash flow till about 2024 is what they project. But in 2024, they're predicting to have around 670 million in free cash flow for 2024. I would like to think that they're going to get there. It may take them a little bit longer. Just depends on how well they can execute their revenue streams and keep their costs down and run lean. Now, with that being said, they've got a $1.1 billion cash burn from 2021 to 2023. They are going to burn a lot of cash in those 3 years. But if you look at the books, they currently ended 2020 with $5 billion on their books. If you take all of the debt, the 1.1 cash burn for the 3 years, the accounts receivables, they will still have $3 billion left over to, pretty much help them and let them ride for any, bad months, bad quarters, anything like that. So the balance sheet still looks healthy, and that should be able to carry them until they get profitable or really, really close to profitable. So guys, it's looking good. Obviously, anytime you're investing in a growth company that's high multiple, no earnings, no free cash flow, no net, it's risky, but I am willing to take that risk when you start looking at some of these growth numbers like we've seen in the last 2 years, and then we look out for projection and guidance moving forward. I actually saw something from the CEO said that he thinks that they're actually going to beat for Q2 on their guidance that they've issued. So if they can keep executing, I think the stock will do multiples of where it is today. If we take a look at the chart here, guys, you guys can see we've looked at this before. It had this beautiful bullish Bartley, a mixture between a bat and a Gartley. I sent this out in the Patreon right as it was getting to the pattern completion zone. But you guys can see right off of this, all-time high, it retraced almost 90% back to this critical inception level from back in August and September of 2020. Now, once it reached that level, boom, popped straight up and is currently sitting at this critical, level right here where it used it as support in December. But look at what the price action does historically when it gets above this level around like the $36 to $37 range. Straight up, straight down, straight up, straight down. Now, it hasn't been able to break above that since back in February where it fell below. It did try to retest it a few times and wasn't able to hold, and then that's when it retraced down to the 90% range. Now, the stock is looking phenomenal because as you can see here, you're getting all the negative momentum flowing out of the stock. You actually got double bullish divergence when it reached the pattern completion zone of the Bartley, and then that's why you got that sharp reaction straight back up to these levels here. Now, what I actually think we could see is a bullish cipher pattern that would look just like this. And it would come up here to a 786 retrace, which would be right around the $51 range. Now, obviously, this is a bullish pattern or a bearish pattern right here, guys. But with that being said, if it does reach this pattern completion zone, you should see it sell off, right? So ideally, what we would want to see is we would want to see it come up, retest this critical level, reach the pattern completion zone, come back to retest this area before making its advance up to the all-time high of the $72 range. Guys, on the bullish Gartley, you had already reached the first profit target The second profit target would be up here around the $50 price range. So either or, if you're looking at the bullish Gartley, long term, or if you're looking at the potential bearish cipher pattern, your target is still the same at the $51 range. The one thing I will say though, guys, is we have not seen the stock recapture its previous discernible swing high, so it has not made a higher high. It has to break this critical level right here where it's currently sitting at, come up, make a higher high, come back, retest it, and make a higher low, because we have not seen a higher low yet. We had a lower low right here. It has started to run and it is looking nice, but we need to see it break this high right here, come down, retest it, so we can confirm that it is a higher high and a higher low. It has since gotten above the moving averages, which is fantastic. The other thing I will say, guys, is you could see the stock price come up, sell off, come all the way down here. As long as it does not close below this C level, this bearish Gartley pattern is still valid and it is still, in play. If it does close below that level, obviously it's not in play anymore. We'll have to regroup. I do not see it doing that. I see it breaking above this area here, and historical price action shows us that it's straight up, straight down. I think once you break this level, I'll see you at D 51 bucks. If it comes back and it can retest and hold this area right here, or at least one of these areas, y'all see you at 72 bucks. I don't think it'll happen overnight, guys, but I absolutely see something like this playing out. The momentum in the stocks looks great. The market's starting to, move back into growth, favor tech, favor high multiple stocks like it was not doing in the previous few months. I think if you, got into the stock down here around 26 bucks, congratulations. I added more shares around that area. I'm going to continuously add shares of this stock on any sign of weakness, obviously trying to keep my cost basis as low as possible, because I think if we look out for the next 12 to 24 months, the stock will do very, very well. And honestly, I think this $72 range is very doable and very recapturable within the next 12 months. Overall, guys, I love it. If you're not in the stock right now, I would definitely wait to see if it gets rejected at these levels, see what type of price action, occurs, because after this big run from 24 with no pullback, you definitely want to kind of wait and see what's going to happen. But if you have a long-term, mindset where you're going to hold it for years to come, obviously a few bucks doesn't make all the difference in the world, but overall you want to get the best price you can. But that's it for today, guys. Just wanted to give you my thoughts. I think it looks awesome. I think it's going to do awesome. Obviously, there will be some ups and some downs. It's high multiple, high volatility. There is risk involved here. If the chip shortage keeps getting worse and worse and worse, they can't meet production. That's going to be a big issue. But they are opening up those 2 new factories in Wuhan and in, I can't remember the other place, but 2 new factories where they will do all of their own manufacturing, which is huge. So put this one on your watch list, guys, if you don't already own it. It's one of my top 5. I'm going to continue to add it. This video is for entertainment purposes only. I am not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come over and join me at the Patreon. I would love to talk with you. If you want to talk with me one-on-one, let me know what you think down in the comments, and I'll see you guys in the next one. Peace.